Dear Chartered Accountants, working professionals, and students in the domains of Indian auditing, accounting, and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant.
Daily news and updates for 23rd January 2024. Some of India's two-wheeler makers are revisiting the past. Encouraged by the electric-powered rebirth of the Bajaj Chetak, which has been a runaway success, and a thriving domestic electric two-wheeler market, two more iconic 70s brands are electrifying their yesteryear favorites. Kinetic is looking to address the needs of Bharat with its e-Luna, a step-thru cross between a motorcycle and cycle. LML, meanwhile, has positioned its upcoming feature-packed Star electric scooter in the mass premium segment. A total of 859,000 electric two-wheelers were sold in India in calendar year 2023, up 36% year-on-year. While the e-Luna is set to be launched in February, LML Star is likely to go on sale in the first quarter of financial year 2025. Both brands will rely on their strong legacy to make a successful comeback in this intensely competitive market. S&P has revised outlook for Adani Ports and Adani Electricity to stable from negative, citing strong cash flow in the next 12 to 24 months. Adani Ports' ability to pay off liabilities is expected to be in the range of 3x to 4x over the next 2 years. The rating agency said conclusion of most investigations without evidence of wrongdoing has reduced downside risk. JSW Group plans to invest 4 billion rupees in EV manufacturing projects in Odisha, India. Electric models accounted for 2% of India's car sales last year, with Tata Motors leading the market. The government aims to achieve a 30% share of EV sales by 2023. JSW Group will allocate 250 billion rupees for an EV battery manufacturing plant and an EV components plant in the initial phases. The IBBI conducts the Limited Insolvency Examination or LIE in pursuance of Regulation 3 of the Insolvency and Bankruptcy Board of India Regulations 2016. These regulations also empower IBBI to determine the syllabus, format, qualifying marks and frequency of the examination to be published at least 3 months before the examination. Further, IBBI is also empowered to conduct valuation examinations. Now, in order to improve the effectiveness of the exams, the IBBI has decided to reduce the time period between two consecutive attempts from 2 months to 21 days for LIE and the valuation examinations. This adjustment would provide candidates with greater flexibility and opportunities to improve, thereby establishing a more dynamic and responsive examination system. The SEBI observed that many instances of AIFs being structured to facilitate circumvention of different financial sector regulations have come to light, thereby eroding trust in the system. Therefore, with an objective to restore trust and prevent such circumvention, while at the same time ensuring minimal impact on legitimate AIF investments, SEBI on 19 January 2024 has floated a consultation paper on a proposal to enhance trust in the alternative investment funds ecosystem to facilitate ease of doing business measures. SEBI has come across more than 40 cases involving rupees 30,000 crores where AIFs appear to have been structured to facilitate circumvention of certain financial sector regulations. SEBI has identified some of the identified modus operandi where AIFs are being structured to facilitate circumvention of financial sector regulatory frameworks such as the evergreening of loans by regulated lenders and circumvention of FEMA as well as qualified institutional buyer norms. AIFs have been set up, resulting in the evergreening of stressed loans of some regulated lenders, thereby circumventing RBI regulations. In this regard, the SEBI has proposed to introduce a requirement that AIFs, managers of AIFs, and the key management personnel of AIFs and their managers shall ensure that AIFs do not facilitate circumvention of extant financial sector regulations. Further, it is proposed that SEBI shall frame the principles that shall guide the framing of the specific and verifiable standards for due diligence that the stakeholders of the AIF will need to conduct for ascertaining whether the participation of an investor in a particular investment of the AIF facilitates circumvention of extant regulations. The SEBI has sought public comments with regard to this proposal. The last date for submitting comments is 11th February 2024.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.